Ladies and gentlemen, please welcome President and CEO of Every, Randy Taylor.
My voice. Good morning and welcome everyone. First off, I would like to thank the organizers of G2E, which is presented by the American Gaming Association and organized by Reed Exhibitions, for once again bringing the worldwide gaming industry together for this great event. Every is proud to be the sponsor of this keynote session and an exhibitor at the show. Our industry has seen some challenging times over the past few years, but I'm pleased to say that the gaming industry is stronger than ever and continues to outperform expectations. Players are visiting their favorite casinos, and the industry's vitality is evidenced by the new number of casino openings and expansions that are occurring across the country. It is a testament to the hard work and efforts of both our casino partners and our manufacturing colleagues. The unwavering spirit of the industry has also brought us here together at G2E, and we're excited to define the future of gaming together. Good luck to all as we officially kick off the 22nd annual G2E. Thank you.
Gaming is thrilling, strong, innovative, united. Gaming is growing, entertaining, diverse. Gaming is opening opportunities, driving economies, building careers, investing in communities. Gaming is dynamic, responsible, thriving. Gaming is G2E.
And now, please welcome President and CEO of the American Gaming Association, Bill Miller.
Wow. Good morning, everybody. Good morning back. All right. Look, welcome to G2E. I am so excited about this G2E. And look, whether this is your first G2E or you've been coming here for many years, thank you. Thank you for being here. And while I'd like to think all of you came up and woke up this early for me, I know it's much more likely you came and filled this room in anticipation of hearing from gaming's top executives. So I plan to be brief this morning and yield the floor to those who are actually driving this industry forward. This is my fourth G2E since becoming President and CEO of the American Gaming Association. And while normally that's not terribly interesting, think about what's happened, right? 2019 G2E attendance was at an all-time high. In 2020, we went virtual, like everybody else in America, when large gatherings weren't allowed. And then 2021, we were thrilled to come back to Las Vegas, but we had masks and health and safety measures in place. And last year I said, we're back. This year, just look around. We are really back. We're close to pre-pandemic attendance on the floor. And this place is packed with exhibitors. And you will and have probably already felt the energy in this room and out on the floor later today. We've been through a terrible couple of years, but our industry is standing strong thanks to all of you. So I'd like to hear it for the performance that you all have helped our industry achieve. We're coming off an amazing year with some major milestones. Think about it. Sands closed. The Sands deal closed. MGM bought Cosmopolitan. Seminole bought Mirage. And San Manuel reopened the Palms. And that's just what happened here in Las Vegas. Meanwhile, legal gaming continues to expand in new states. And sports betting, it just keeps marching forward. More than half of American adults can now legally bet on sports. Our momentum, it's undeniable. And many leaders in this room and in other places are responsible for this. But recently, we lost some great ones, including two giants. Sheldon Adelson, our industry's greatest visionary, and Senator Harry Reid, our industry's greatest champion. They laid the foundation for today's success, and we are deeply indebted to Mr. Adelson and Senator Reid for their contributions to our industry and setting us up for this moment, and we are never going to forget them. Like all American businesses right now, gaming faces real challenges, whether it's inflation, energy costs, labor shortages, supply chain issues. But despite these, our industry is posting incredible results, quarter over quarter and year over year. And that's really without business and international travel anywhere near our pre-pandemic levels. Last year's record performance is by and large fueled by pent-up demand. But this year, we proved that it wasn't a fluke. We have shown continued strength, and I don't think that's going to be changing anytime soon. So the question really is, how do we use this momentum to reach even greater heights for the industry? I'd like to offer 3 opportunities. 1, embracing a digital future. 2, is protecting and expanding the legal regulated gaming market. And finally, doubling down on our commitment to responsibility. First, for the adapting to a digital age. Online gaming, whether it's sports betting or iGaming, it's our fastest growing segment. Payment modernization is well underway, and new technologies continue to emerge. And the truth is, oftentimes they raise more questions than they answer. But that has never really stopped this industry before. Just as we learned when it came to digital payments, legalizing sports betting or expanding our leadership and responsibility, if we get in front of emerging issues, we can shape them to fuel our growth. And so that's what we'll do again. Look, from crypto to blockchain to the metaverse, starting here at G2E this week, we will bring together the industry's best minds and leading voices to debate the issues defining gaming's future and chart a path that drives our success forward. Secondly, our industry future depends on tackling our biggest threat, the illegal and unregulated market. Illegal and unregulated websites and machines pose a direct threat to our industry's hard-earned social and regulatory license to operate. They prey on customers, especially the vulnerable and the underage. They don't provide any consumer protections or invest a dime in responsible gaming. They're a threat to local communities, and they open the door for other criminal activity. And they have an unfair advantage in the marketplace. They ignore the regulatory standards we work so hard to uphold. For all of these reasons, we're taking the illegal and unregulated market on with every weapon at our disposal. We're engaging all levels of the government, from the Department of Justice to Congress to governors, state legislatures, attorneys general. And we can do this because the AGA has earned a seat at the table through years of building trust with national and state leaders. We'll strengthen that argument next month when the AGA releases new research showing Americans bet more than $300 billion annually with illegal and unregulated websites and machines. This comes at a loss of $15 billion in gaming revenue. But look, this is not about us. It's about the broader impact. Illegal gambling costs communities an estimated $4 billion in taxes annually. We're standing up and we're calling out illegal operators by name. Look, not surprisingly, they've responded by harassing us and trying to intimidate us. And our answer is, bring it on. They can't stand up to the scrutiny of the court of public opinion, and they most certainly can't stand up to the scrutiny of justice or the court of law. They need to be shut down, but we know we can't do this alone. It's going to require law enforcement to get aggressive and go after bad actors, businesses to remove unregulated machines, tech companies and the media to cut off these illegal platforms, and policymakers to strengthen laws and close loopholes. This is a fight we're in for the long haul, and we're not going to win it overnight. But together we can, and will make it much, much harder for them to do business here in America. And finally, we need to double down on our commitment to responsibility. Our industry is more visible than ever, and with that increased visibility comes greater scrutiny from the press, from policymakers and the public. And so we continue to look for ways to raise the bar on responsibility and ensure we're meeting today's moment. Over the next year, the AGA will keep meeting with advocates, researchers, regulators, industry leaders, and many others to explore a wide range of questions, including how should we modernize responsible gaming for today's market? How can technology and digital transactions empower and protect consumers? How can we deepen collaboration with industry stakeholders and advance a sustainable marketplace? Pursuing these questions and improving our efforts is not only the right thing to do, but it's key to ensuring our industry's long-term success. To further gaming's leadership, I stood on this stage last year and I announced we'd be issuing a new award to recognize industry pace setters who epitomize what it means to operate responsibly. Yesterday, I was very proud to honor Aristocrat's Trevor Croker with the newly established ESG Award for Excellence in Sustainable Gaming. Trevor is the definition of a servant leader. He's made ESG commitments central to Aristocrat's global operations. And as chairman of the AGA, he pushed the industry and the industry association to do the same. Trevor played an integral role in defining core ESG principles for gaming and partnered with the AGA to conceptualize and publish our first ever ESG in gaming report. This foundational effort, initiated by Trevor, will drive our industry's ESG commitments for years to come. Please join me in congratulating Trevor on this award. And following Trevor's great example, the American gaming industry will continue our important work to protect the environment, to build a more diverse and inclusive workforce, and to support our communities. All of this is essential to strengthening our industry today and into the future. And as we think about that future, we really have so much to be optimistic about. Gaming is as popular as it's ever been. Our growth is formidable, and the wind's at our back. And it's your creativity and hard work that got us here, and there is no limit to what we can do next. For all of us at the AGA and those of us that have put on this G2E today, this week, we thank you for being here and hope you have an amazing week.
And now, please welcome to the stage CNBC's gaming correspondent and Emmy Award-winning journalist, Contessa Brewer.
Last year I came out here and I think I cracked a bunch of jokes about COVID and masks and how we were all, oh, look, you do have I'm over even the COVID jokes. I don't even want to talk about COVID anymore. It's so great to see you. I don't know how many of you are able to watch CNBC on a regular basis, but you know there's like a steady drumbeat of beware, beware, beware. And when I'm anchoring, I'm up there and I'm like, hey, 20% down. Look at another day of red. Well, I have to say, it feels so good to stand here and be the bearer of good news for this industry to be in October and you're looking through the first half of the year, tracking 15% above last year. And last year was a good year, quarter after quarter of record set. And the persistent, optimistic outlook from the CEOs I think is a reason to cheer and to feel happy. So I'm really excited to be here today to be moderating this panel with some of the biggest leaders in this industry. And to start off this morning, I have Craig Billings, the CEO of Wynn Resorts, and Derek Stevens, the owner and CEO of Circa and the other downtown Las Vegas casinos. Guys, will you come on? It's a fun time amid dark storm clouds to be talking about Las Vegas and how Las Vegas is this beacon of hope in an otherwise, sometimes, bleak world. Derek, let me start with you. Give me a sense of how you're going into fall, what you're anticipating for the new year here in Las Vegas.
Football season's here, baseball playoffs are here. Tonight's opening night for the Vegas Golden Knights. So we've seen really the next 10 weeks that look very, very strong. Obviously, we're still a little concerned with what's happening with the Fed and inflation. But right now is a great time to be in Las Vegas.
When you say that, is it because you're concerned that rising costs will cut into what your customers are willing to spend?
Yeah, I mean, it's a combination. I mean, the rising costs on products that we're purchasing, the rising costs for our customers. Fortunately, gas has come back down a little bit, but just general overall cost element. We haven't seen an impact on the housing market quite yet, but inflation and just basically the interest rates coming up give us a little concern. But we feel very, very good over the next 10 weeks.
How are you feeling? Pretty good?
Yeah, well, first of all, I'm feeling pretty good to be up here with Derek. One of the things that is near and dear to our hearts at Wynn is a sense of proprietorship and a sense of personal ownership. That's what really gives a property soul. And so nobody is doing that better downtown than Derek is these days. So kudos to you. I just wanted to say that before we jumped into the official program.
I appreciate that. And as you know, I have to jump back and say, of course, Wynn is my favorite casino in Las Vegas.
You know, it's interesting, though. We talked this summer, Craig Billings, Bill Hornbuckle, Rob Goldstein, and I sat down for a session. We were really talking about taking over a founder-led company and how you navigate what had been the baby of a previous leader. And it strikes me now, I mean, Derek, you're like the sole mogul of Las Vegas in a town that used to be chock-a-block full of them.
Well, I guess I enjoy the fact that we have a quiet period and we're not publicly traded. But, I guess maybe that means we've been here for a little while and things worked out pretty well. I feel really great about our team we kind of grew up with. And we've learned from everyone in Las Vegas and from Craig previously, Matt at Wynn, and when you see the history of how Caesars has evolved and how MGM's evolved and how for us how sports betting's evolved, we really kind of revere the history of Vegas and the history of gaming. So we're just fortunate to be living in this time, frankly.
To Las Vegas for Wynn and Encore. Did you ever think that you would see the day where you had Las Vegas and Boston out-earning your Macau properties?
I would probably be lying to you if I said yes. No, of course not. Of course we didn't expect that. But Vegas has been a tremendous story. There's a narrative around here that Vegas consistently reinvents itself. I actually don't think that's the case per se. What I think the town does very, very well is find additional sources of demand and bolt them on. So it started with gaming. With the opening of the Mirage, it became about more upscale amenities, food and beverage, group and convention, and now
sports, and even what Derek is doing downtown, where I actually think he's created a subsegment of the market that are engaging with what he offers down there. And I think Vegas is incredibly good at that. I think that a lot of those forces have come to bear in the form of a series of tailwinds over the course of the past probably year and a half. Certainly for us, things have been great. Record ADRs, excellent occupancy, our food and beverage, our theater, everything is firing on multiple cylinders, and so we're delighted about that.
What's happening with your international business? Are you seeing a big return now that travel is freer?
Ex-Asia, yeah, we're seeing the international business come back.
And when do you think that, I mean, clearly China is still so uncertain, but from Japan or Vietnam or Singapore, are you getting visitors?
Yeah, we're seeing it trickle back. China, as you point out, is the big unknown. We'll see how this week goes with the major political events over there, and we'll see how it goes. But there's a lot, as you point out, there are tailwinds that aren't here yet, that aren't back yet. And so I'm bullish on Las Vegas. We're not ignorant or immune to what's going on in the broader macroeconomy. We're less impacted by oil and inflation with our aspirational and luxury customers. Probably more impacted by the financial markets.
And what about currency? Is that even a factor right now with Macau sort of in this limbo?
It's not really. I mean, on the margin, you'll find euro-exposed consumers and pound-exposed consumers that may think twice about making the trip, but we can easily backfill that.
When you say the rising rate environment and the access to capital markets, can you give me a sense of where things stand for Wynn in terms of, are you in a buying mode? Is this a wait and hold and hang on to your balance sheet mode? How are things looking for you?
Yeah, I think, when we talk about interest rates, the industry's been here before. I mean, you build one of these buildings, it presumes a healthy amount of leverage. The cash-on-cash returns for assets like this don't work without a healthy amount of leverage. And interest rates haven't always been as low as they were over the course of the past X number of years. So if you're up, running, stable cash flows, you have long-dated fixed coupon debt, it's really about prudent capital management. If you're building or reliant on construction finance or you have a property that's ramping, I think the game has changed a little bit. You're going to need more equity, and therefore, for the same returns, you're going to have to have an asset that's more productive. But for us, it's about prudent capital management over the cycle. So of everything you just mentioned, I would say all of those.
Are you concerned about rising rates? How does that affect your business?
Well, if we were building Circa today, I agree with Craig completely. It would change everything. We're fortunate, we put our equity in, and then we had our construction loan, interest rates, and liquidity in the markets were a little bit different 4 years ago and 3 years ago. So today, I'm glad we did a refi, and we've got a stable business that's up and going. I think today you've got really two factors. Obviously, liquidity and the higher interest rates of the market's one thing, but number two, the supply chain issues. You end up with more uncertainty on guaranteeing an opening date because there are still so many supply chain related issues, particularly in construction, that kind of changes the game. I would definitely be more conservative today than maybe what I was three years ago.
Are you going to be in the market of trying to put your capital to work with uncertainty about the American economy and the global economy?
Yeah, we've always kind of been more of a counter-cyclical investor, so we're going to continue to grow the business. I would say leverage ratios are going to be a little bit lower here going forward, but we're going to keep reinvesting in the market as the opportunities arise.
You mentioned supply chain. What about labor issues? Have those completely resolved? Craig?
It's hard to say for us because we took a different stance during COVID. We, similar to I think what they did in this facility, we didn't let anybody go. So we've been spoiled in that we haven't had to deal with a lot of the labor issues. I hear the market remains very, very tight, particularly in certain back-of-house positions that are tough to fill. It hasn't been the case for us.
What about for you, Derek?
We're doing all right. I would say that there's elements that are changing. I think in some of the divisions that have higher labor content, You're seeing a little less in that area. High labor divisions such as table games and others, it's going to be impacted. When you see the restaurants, you see more restaurants, and this isn't really just Las Vegas, but you're seeing more and more restaurants that are 6-day operations or 5-day operations or potentially just a dinner operation because labor has still been an issue really since 2019.
I was at a conference in San Diego a couple weeks ago, and the founder of the Latitude Conference, which is about economic wealth of the Latino cohort in the United States. And the founder said to me, Contessa, one of the things that gets missed a lot when we're talking about inflation is the impact of wage inflation. And the reason why that matters and why we're seeing that impact is because we don't have a comprehensive immigration policy, and that we need immigration. If Congress were to tackle an immigration policy, would that ease the labor concerns for Las Vegas generally, for the destination?
That's a pretty complicated question, but I would tell you that anyone that says inflation is transitory, I don't believe that to be the case. There's some built-in inflation that's going to last for quite a while. The Fed and Jerome Powell have a hell of a task in front of them, but inflation is going to be here for a little while. It might change a little bit on products, but there's certain elements of wage inflation that I think we all understand. When someone gets a raise, that raise doesn't go away. When there's a certain product that increases in cost and there's labor that goes into that, it's not like that product's going to come back down in cost. So there's going to be a much different level, a sustained level of inflation going forward, in our opinion.
I want to ask you about some sort of big issues facing Las Vegas. Okay, there's one about water security. There's one about safety, which I was surprised when I'm walking. I would literally walk from Caesars to the Venetian the other day, and the chatter as I'm walking was about the stabbing that happened out front. I want to ask about whether there's a difference in perception of safety and water and cybersecurity, because now so many of these machines, so much of your system is connected. Do you feel at risk? So on those three issues, cyber, water, safety.
Just those?
I mean, I don't want to ask overly complicated questions, but
Which would you like to tackle first? Cyber?
yes.
Okay. So cybersecurity is a macro issue for every company in the world. At any given point in time, there's millions of bots out there trying to poke holes in your security infrastructure. And malicious activity is just a fact of life. Now, historically, for the land-based businesses here, because of the complexity of the applications that run these big buildings, and for regulatory reasons, a lot of the data was actually stored on premises, and that's still the case today. So, in that case, it's about hardening the perimeter of your network. And we started doing that. We put a ton of resources into that beginning in 2014 after a competitor of ours was very famously hacked. And so we've been quite well prepared from that perspective. I think what's changing is the advent of digital. So now you have applications that are out in the wild passing personal information to third parties, from third parties back to servers that the operator owns. And that's, I think, the next frontier, and it requires a lot of vigilance. It's not rocket science, per se, but it requires a real focus and a real dedication. The industry's scaling very rapidly, and so this is something that you have to constantly monitor, but it's something we have to pay attention to every day.
What about water? Derek, you want to tackle that one?
Yeah, I'll talk about water. I mean, the one thing that gets brought up often with Las Vegas, I mean, being in the middle of the desert, people talk about water conservation. But what I think a lot of people don't realize, that Las Vegas and all of Southern Nevada, community-wise, this is a leading water community of anywhere in the country. One thing people don't realize is that if we turned on every shower in every house, apartment, condo, and every shower in every hotel room in Las Vegas, there's no loss of water. This is a closed-loop system. The Las Vegas is the most water-efficient community in the country. by a long shot. I mean, effectively, when we talk about it, I mean, the Colorado River helps support so many businesses and industries. 13 states are impacted by the Colorado River. And if you think about it, one particular agricultural crop is worth 20 feet per year in Lake Mead. I mean, effectively, when we're growing hayseed and alfalfa, those crops alone are taking 20 feet out of Lake Mead annually. Now, we use this, for a lot of reasons. It's a heck of an ag market, but we're also exporting 35% of our alfalfa. And effectively, what we're doing is we're exporting water from the Colorado River to China. So at some point, when we talk about we live in a closed loop system, I think there's different ways we have to look at the water usage in the Southwest.
And what about safety, Derek?
Well, I mean, safety is something I think Craig and Wynn have done a great job with. I mean, what MGM and Caesars have done, I think with what the Fremont Street Experience has done, what have you done? This is the number one issue that's on our mind. Locally, whether it's on the sidewalks along Las Vegas Boulevard, whether it's on the Fremont Street Experience, we're making a handful of moves. On Fremont Street Experience, we went to 21 and over. We went to 21 and over earlier this summer, and since that time, safety's changed pretty dramatically. Obviously, it's tough for me to stand up here and say that because something could happen tonight. But when we look about some of the crazy things happening, in the country, safety is the number one issue in every city in this country, in every tourist destination in the country. And I think between Metro, between the different federal groups, and between all the casinos, we're dedicating more resources than we ever have to safety and security in Las Vegas.
So given that you're helming your companies heading into an uncertain economic future, I mean, for you, you've got concessions coming due, a surprise bidder in Genting that coming in at the last minute to compete for one of those concessions. Give me a sense, Craig, of how you steer Wynn into 2023.
Sure. Just quickly on the safety topic before I go there. Look, safety is a societal issue. Okay, Las Vegas is not immune to broader societal issues. And while I won't digress into the benefits of ranked choice voting or anything else that might help change things, I think when you combine the security presence that exists within these buildings, the Metro Police Force here, and the surveillance infrastructure that exists up and down the Strip, it's hard to find a safer location than the Las Vegas Strip. So we should keep that in perspective. This is a broad societal issue, not a Las Vegas issue, per se. With respect to the future, we have concession renewal happening in Macau, as you mentioned. We have a Las Vegas market that has been incredibly resilient. Again, we're not oblivious to what's happening in the financial markets with inflation, with oil, but certainly the sky is not falling yet. We have a Boston asset that's just come into its own, and we have an amazing development project in the UAE, which we'll talk more about over the course of this fall. So we have, Wynn's future is as bright as it's ever been. And so for us, it's about prudent capital management, staying liquid, making sure that we can put capital into our properties even when things appear difficult, just as we did in COVID, by the way. We're here for the next 50 years. We think about things for the next 50 years. And so we have that luxury. That may result in some volatility in the stock. I can't control that. All I can do is think about the next generation of this business, and that's what we do every day.
Derek, how about you? How do you position your company for 2023?
Well, we're trying to position our company in a manner that we're prepared for. We're preparing in case there does happen to be a bit of a downturn. But again, we're in the same boat. We're going to be here for a long time. So we're trying to make sure our balance sheet's set up. If we do have a slow time, we'll be able to get through it, and then really trying to focus on the continued growth that we see in Las Vegas and the continued growth that we see in sports betting.
And your prediction, is Las Vegas going to get an NBA franchise?
It's not an if question, Contessa. This is a when.
Derek Stevens, Craig Billings, thank you very much.
Thanks,
Great to
Contessa.
see you.
Thank you. You too. See ya.
With me now is Sue Kim, who's the chairman of Bally's, and Jay Snowden, the CEO of Penn Entertainment, both with massive footprints across the United States and very active. Hi, Jay. Nice to see you. Hi, Sue. Nice to see you. Very active online, interactive businesses. We now call this omnichannel. So explain to me, Jay, what is omnichannel? Why is it important to Penn?
Yeah, look, omnichannel, you can't think of a sector today where companies aren't thinking about their digital strategy and their omnichannel strategy. And if you don't have a really solid omnichannel approach and thinking about what your digital future is, I think you're probably going extinct. And so look at the retail industry, what Amazon did to Walmart and Target. And I think there was a period of time where those mostly retail providing companies had their heads in the sand and didn't think Amazon was going to work. And it took them a while to wake up. And I actually think both companies have done a great job over the last 5 or 6 years of approaching omnichannel the right way, which is giving your consumers multiple options to engage with you on your products and services. Entertainment industry, same thing. The Disneys and the Comcast Universals were kind of stuck in only land-based and linear cable. And Netflix obviously was a disruptor in their case, but I think those companies have continued to do a really good job of figuring out how to have a digital strategy that is complementary to their land-based and or linear strategy. So as it relates to us, it really was when PASPA was overturned in May of 2018 and sports betting became legal outside of Nevada and became a states' rights issue, and states started to legalize, and now we're over half the country is legal with online sports betting. And so we viewed that as an opportunity to go digital. And as an industry for a long time, we'd get asked these questions around our aging audience in the land-based businesses. And you'd ask the question of how are you going to get younger? And we'd all do this uncomfortable tap dance because there was no great answer to that question. And but PASPA being overturned and now being able to engage audiences, especially younger audiences, online, mobile products, has really opened the door. So the brick and mortar casinos for us are at the core of that omni-channel strategy.
Are you seeing younger casino customers because of the enthusiasm over sports betting, do you think?
We're seeing younger customers, I think, for 2 reasons. One, we have digital products that they're interested in engaging with us, online sports betting in the states where it's legal, online casino. There's a handful of states where that's legal now. And then combined with the fact that during COVID, there were a lot less forms of entertainment. Bars were not open late. You couldn't go to a sporting event, couldn't go to concerts. And so a lot of these younger audiences found their way to the casinos and found the casinos are actually a lot of fun. And so we've actually grown we were looking at the numbers yesterday, our 21 to 45-year-old age segment used to represent in 2019 around 10% of our total revenue. And that business has doubled in a matter of 3 years. So it's now closer to 20% of our total business. And so that's a great story. We need that 20 to become 30, 35 over time. But without an omni-channel strategy, we'd still be sitting at 10% because you're able to engage with younger audience how and where they want to be engaged on their phones, traveling, digital offerings, and then introduce them to casinos and create an ecosystem where you've got great products and services and experiences for people.
And Sue, for Bally's, it's also an omni-channel strategy.
It's what he said,
Yeah.
So
Ditto.
Look, so when I became chairman in 2019, I actually came to CJ, and I walked away being like, we got to get on this. Because really, the way we look at it, it's not omni-channel gaming.
It was so nice of him to help a competitor, by the way.
I mean, really good man. But anyway, it was just gaming. It's just gaming. It's not online gaming. It's not land-based gaming. It's just gaming. And when you look at it that way, well, there should be gaming all the time. And gaming is gaming as a service. Gaming is just a thing that you can do physically when you're sitting before a machine or at a table, but you can also do that at home when you go home. And so I think you can call it omnichannel. For us, it's just, why not expand the pie and deliver gaming and go to where the customer is.
Are you concerned that and both of you have companies that are participating in the attempt to grab market share in your sports betting and iGaming markets? Okay. Are you concerned that down the road a backlash against gambling? And I'm already hearing it percolate, the concern from parents about their kids being exposed to persistent gambling ads, that will affect not only your online business with increased regulation, but potentially your bricks and mortar business, Jay?
I mean, that's on us, right? I think we have to approach this really responsibly. We've seen a lot of issues that have come to light in European markets over the last decade. And if we don't self-regulate as an industry, then you're going to get regulated in ways that you're probably not real excited about. And so it's a responsibility to really take the knowing who your customer is, being very compliant at the state level because the regulations are always a bit different state by state, really understanding what regulators' expectations are around how and where and in what means you advertise to your end consumer, who is the core audience of where you're advertising. Like, these are things that if you don't treat that responsibly, we're headed in a bad place fast. And I do get concerned sometimes that it's a bit much as I'm watching football on Sundays with my 13-year-old son, and he's asking me, what bets we should place because he's seeing all these ads. It's something that you have to be mindful of. Right. It doesn't mean that it's bad or it's overdone today, but I think we have to look at this and handle this very responsibly, and I think it's on us as an industry to do that.
Right. I would just add two things. One is, so Bally's, we did a large acquisition of an online gaming company based in the UK called Gamesys, and which closed about a year ago, a little bit more than a year ago last year. And there in Europe, online gaming has been regulated for almost 2 decades. So they're actually further along than we are on that. And I'll just tell you, it's the RG there, because you have all the tools, the digital tools, and knowing what your customers are doing at all times, it's even more sophisticated than the most sophisticated land-based systems here today. So I actually think that's something that will absolutely happen. You don't see it now in the land grab of getting to sports betting revenue numbers. You're not seeing that. I absolutely believe that there will be that sort of backlash in terms of, being able to, balance the load to the consumer. And also just use technology to make sure responsible gaming has to be core to our business product, actually, because you cannot, gaming is such a powerful product that you have to build in the responsibility.
Skeptics are going to look at this, and maybe I'm one of them, who goes, yeah. The lip service to responsible gaming, I get. I hear from every CEO that I interview, we need a sustainable industry. We're not in this to see our customers. My question is, when the rubber hits the road, turning an occasional gambler into a regular gambler is good for the bottom line. How do you interfere with a regular gambler becoming a problem gambler? What steps are in place?
Yeah, I mean, Contessa, I would say, keep in mind we've been at this for a long time. Okay, we've been in the casino business for decades. We have great policies, we have great training programs, and we don't want irresponsible gamblers in our ecosystem. It doesn't move the needle from a cash flow perspective, so we're constantly trying to seek out those who may have gambling problems, which is a very, very small percentage of those who engage in our products or come to visit our casinos. And that will never change. So this isn't a lip service because online sports betting is new. Sue's been at this for a long time with land-based casinos, and so have we at Penn. And we have a reputation, we have a track record with our regulators, and I think our regulators would vouch for that.
I would just add, actually, if I can, omnichannel. No, because the reality is the answer is if you're doing mobile gaming and you're only doing mobile gaming, then if you think about it, a person's product is what you say it is. And therefore, the only way to get people to engage is to load all that advertising in with media and whatever else. When you have the ability to combine land-based presence, land-based customer acquisition, when you have the ability to combine actual media rights and have just a little bit more of a I would say more of a subtle engagement of adding gaming to media, not just, every commercial break you're just getting hit and hit and hit. I actually think you get a better experience, you get a better customer experience, but also it's a more responsible experience where an omni-channel gaming company can actually offer a better balanced approach.
I want to ask you about the economics that we're currently facing. Because you have casinos all over the country, where are you seeing softening at all? Like in what demographic, in certain...
Wall Street.
Yeah. Well, so are you seeing a chilling effect
My Robinhood account.
Go ahead. Take it away, Sue.
I mean, look, the reality is in the real world, the real economy, things are pretty good. I mean, the reality is they're too good. There's too much unemployment. I mean, there's too little unemployment, sorry, that the economy is almost somewhat overheated. There's wage inflation, there's price pressure. Frankly, this slowing of the economy definitely in the medium run, but even in the short run, will, I think, make for a healthier, longer, more sustainable growth pattern. It really, I think that the biggest issue is, banks aren't lending. Obviously the stock markets and valuations are down. So, omnichannel. The fact that we have businesses that make money and cash flow every day, and I look at the P&L weekly, and I'm like, not bad, not bad. And if you're a growth company, you depended on easy capital markets, super low interest rates, growth promises to fund your businesses. I actually think, again, omnichannel is a wonderful response to the economic backdrop that we're seeing today.
Jay, is it a challenge for you to navigate with investors who maybe right now don't want to see you spending, and what you see as important to medium and long-term vision for the company?
Yes, Sue and I were actually talking about this earlier today. You sit in front of investors at this moment in time, and how's business? Well, business is actually great, and the state numbers are coming out again for September now, and September was good too. But the look you get is like sort of glazed over eyes. There's a narrative that it's going to get bad, and so unless that's what you say, it's you're just sort of noise when you're answering some of these questions. So the way we think about this time is a couple of things. One, over the last couple of years, we've been really opportunistic in thinking about how we can better fortify the balance sheet. So we did a couple of capital raises. We have $1.7 billion in cash on our balance sheet today. And so we can walk and chew gum. Okay, so we can have a buyback strategy in place, which we have, and we've been very aggressive buying back stock at what we believe is a dislocated share price range in the 20s and 30s. We were buying back stock in the 40s. What do we know? And so we can buy back stock given the balance sheet. We also generate a significant amount of free cash flow, over $500 million a year. We can invest in our core business. As we announced yesterday, we've got 2 new expansion projects, one in Las Vegas at the M Resort, a new hotel tower, one in Columbus, Ohio at the Hollywood property, and then we're moving 2 very tired old riverboats in Illinois, in Aurora and Joliet, off of the water. They're going to be land-based right off the interstate in both cases. All 4 projects are going to be great free cash flow drivers, but we have to get these things going. And so there is always that concern of why now? But the reality is these projects take 2 to 3 years between when you say you're going to do them and when they open up. And we all know what's going to happen. The same investors that are asking you today, why now? Why are you committing to these? As soon as we get out of whatever it is that we're in, the next question is, what's your growth strategy?
Right.
And so we're always looking forward. We're always looking long-term. And so we can walk and chew gum, buy back stock now and plan for the future.
Does that mean that despite what comes down the pike for a broader U.S. economy, I mean, there's probably a lot of equipment manufacturers and tech suppliers here, will you be investing in new gaming machines, new technology? I mean, do you expect those investments to continue?
Well, take cashless and cardless technology as an example. We're now live in 4 states. We should be live in another 4 by the end of this year, 4 or 5. You have to have cashless technology, right? If you want to keep those younger segments we talked about earlier, when's the last time a 25-year-old went to an ATM to withdraw cash and had to pay fees to get the cash out of the machine? It's foreign to those customers at that age segment. So we're moving forward on cashless technologies. That doesn't mean that if we are in a deep recession in 6 months, that you don't reevaluate every dollar you spend in OpEx and CapEx, but there's always prioritization. And for us, you always have to stay focused on building for the future, omni-channel, and being able to cross-sell these products and services and experiences. That's not going away. And if you're not prepared for that in 2 or 3 years from now, you're getting left behind.
Jay, you made big investments in the Score and Barstool. My understanding is because of the tech that got brought to the table with the Score, because of the content generation and the users for Barstool. Sue, I want to ask you, a lot of chatter about ESPN. Bob Chapek kind of put down the gauntlet and said, we want them to be in sports betting, but with a partner. Are you interested in ESPN?
Well, we have a partner with Bally Sports, so less likely. Look, we are. Again, this is another thing that I've taken careful notes on the conversations with Jay. Look, we believe that gaming and media can come together in a more subtle and just a more natural way than, again, media and then at a commercial break, gaming, take you off. Because if you think about the way it works, it's almost as if the current system is taking people off the media onto an app, completely, one platform to another. I think that there could be a way where the experience is less disjointed, it's more natural. And actually to pull that off, I think it's less of a partnership and more of a, I would say vertically integrated, or more of a more tightly integrated product, which I think is a lot easier to pull off when we've made the kind of investments that we've made with Bally Sports and Jay's made with Barstool than it will be with a large media partnership. I think that some of those are harder to pull off because you want that integrated, natural experience.
I think that was a no.
Omnichannel.
He's just going to keep going back to it. It's great. I know Erica is going to be on a panel tomorrow about branding. We talked about this last week. You have a lot of brands to manage now. How are you thinking about that? You've had the name change, so clearly it's top of mind for you. Where does Penn go from here?
Yeah, it's a great question. We have a collection of, I think, best-in-class brands on the land-based casino side and regional markets between LeBerge and Ameristar and Hollywood brands. Of course, on the sports media side with Barstool Sports, I think the #1 digital sports brand in North America. And the Score is as big in Ontario and across Canada as ESPN, actually bigger than ESPN. So your question's very good. We have this collection of brands and assets. We renamed the company from Penn National Gaming to Penn Entertainment. I think a better descriptor of the company that we're becoming.
The omni-channel, so to speak.
Omni-channel, once again, buzzword of the day. And I also think about, similar to what Hilton has done through the years and Marriott, you can tie these different land-based brands and digital brands together under an umbrella approach. And so that's something that we're considering internally, where you might see Hollywood Casino by Penn on the outside of the building versus just Hollywood Casino, ties into the loyalty program, ties into the parent name, and gives you potentially another online casino brand to lead with across the country.
I took a road trip for 2 weeks across the country this summer, and I saw something that AGA had alerted me to, but I'd never seen it. These illegal machines and like truck stops, and I take my kids to the arcade, and there's looks like a slot machine in the arcade where my kids are. We've got new numbers here. The AGA research coming at $15 billion in annual gaming revenue lost because of the illegal market. For you, how important is this idea that other operators are coming in and throwing up machines or putting up offshore sites and taking business away from you?
Go ahead, sir.
Well, yeah, I would just say that gaming is a public-private partnership, and we, land-based operators with so many state relationships understand that intimately. Again, it has to be done responsibly. We make investments, we provide jobs, and so, look, I believe that all gaming should be brought to the surface, should be regulated, should be taxed. And in the end, look, a lot of those route businesses are actually legal in some way, shape, or form. Again, it's just another channel for gaming. I think gaming is here to stay in all forms, but obviously if there's gaming happening in an unregulated form, that should be brought in under the umbrella, regulated, taxed, part of the public-private partnership.
Yeah, I mean, look, I'll get on my high horse for a moment. I talked about this a couple weeks ago at the East Coast Gaming Conference. This idea of skill-based games and gray market games, I sent my team out to a lot of these corner stores and convenience stores and bars and taverns that offer these. And what you'll see, and we have photos of this, is children playing these games, families engaging on these games, online lottery products that are supposed to be scratch tickets, look and sound and feel a lot like a spinning reel machine these days if you go online and look in several states where we operate. This is a catastrophe in the making, and this is an existential issue for the industry. It's a reputational issue for our industry, and we need to get on it, and we need help getting on it. We need help from our regulators, lawmakers. We need help putting these people behind bars, if that's what it takes, prosecuting them, and it's a real issue. I grew up in Las Vegas. I've got a couple of very good friends and one family member I grew up with who have gambling problems. And if you don't think the second we identify somebody with a gambling problem in a casino and we get them evicted from the casino, where do you think they're going? First stop is the tavern or the convenience store with gray-based games or skill-based games, and it perpetuates from there. So this is an absolute catastrophe and something we have to get on, and we need a lot of help to do it.
In Ontario, are you facing an even bigger challenge because of how long those gray market operators have been operating?
Well, I think the difference in Ontario is that the regulators there have given people a grace period to go from gray market, which has been the case for a decade plus in Canada, or let's talk Ontario, where it's actually legal now. And they've said, you have a period of time to go from gray market, you need to go regulated. And they actually just drew a line in the sand. I think the date is November 1 or something like that. So I think in Ontario, it's an example of lawmakers and regulators doing what needed to be done. And we need to do that at the state level across the country here in the U.S. as well. This is a big problem.
We've got just a minute left. Just your big prediction heading into 2023, Sue.
Yeah, exactly. I was going to have the crowd do it for me, but look, I think it matters more, again, in an environment where capital is scarcer. Both, we have $300 million plus of free cash flow that we decide, okay, we can put some in investment to digital. We're going to build a large casino in Chicago. We can return capital to shareholders, deleverage. I like our cards. I think that actually, operationally, I think gaming is going to be fine in 2023, especially regional gaming. I don't think that we've seen the same kind of, this burst up that I think people have seen in some of the more destination markets in 22. So I think it's going to be a fine operational year.
Jay?
Look, there's going to be the haves and the have-nots, I think, as we head into 2023. Companies that have great strategy, structural advantages, have executed extremely well, who have great balance sheets. And there's going to be companies that need help. And so, we're positioning our company to be one of the growth companies that is an acquirer as opposed to an acquired. And I think 2023 is a year that some of that's going to come together. The credit markets have to get better than they are today. It's about as bad as it gets, or bad as we've seen in decades. M&A is going to heat up. Consolidation is going to happen. And so I think the companies that have done a great job structurally, strategically, and managing their finances going into 2023 are going to have a lot of opportunities to consider.
Jay, Snowden, Sue Kim, thank you both.
Fantastic.
Thank you.
Nice to see you. Nice to see you. And now I'm very excited to welcome FanDuel CEO Amy Howe and DraftKings CEO Jason Robins to the stage. Talk about a lot of growth in sports betting this year. Hi, Amy. Nice to see you. Good to see you. Hi, Jason. Nice to see you. Clearly, I'm a hugger. I was looking at these numbers from the AGA. Look at this, legal sports betting up 67.5% year over year for the first 6 months of this year. It's really remarkable. Now you're in football season. I know this is what you want me to ask, but what about ESPN, Jason? Did you do a deal?
So shocked you asked that question first, by the way.
We have a partnership with them already, an existing partnership that we think is really a great, relationship that is working well, and nothing else really to talk about at this point.
What about you, Amy? Is ESPN something you're interested in? It's a huge sports brand. You're the market leader in sports betting.
I mean, listen, we've taken a portfolio approach to how we have grown the business. We have great relationships with NBC, CBS. We have some of the best talent in the world. So our playbook has worked really well, and we're sticking to it.
All right, we cleared that up. Does that answer your questions? I knew that was the burn answer.
Here now?
Listen, yeah,
What else
no.
do you wanna know?
Now you got to stay in the hot seat. Let's talk about football and how football season is going and what it tells you about the industry, where it's come and where it's going, Jason.
Well, I always refer to NFL as like our holiday season, and it's really when just much. I wish it, not that kind of holiday season. More like a retail or holiday season where it's the time where the most new customers are coming into the market. The numbers are all going up from where they were a month or so ago, and it's a really important time to execute because even though there's a lot of other sports and a lot going on, it really sets the tone for the rest of this year and then going into next year. And I think it's, to your point, a really good litmus test for the health of the industry. If you see NFL, which is, the most popular sport in the country, growing well, then, typically everything is doing pretty well. So we've been really happy to see that the numbers out there that, have been showing that 67% growth and that strength through the first half of the year were there. And I think the second half from, by all accounts, seems like it's going to be another strong one for the industry. And this is the exciting time right now. It's when everything is growing and there's lots to figure out, but also tons of opportunity for companies like Amy's and mine.
Are there particular segments that you're seeing this year outperforming? Are there particular areas of sports betting that you're excited about, Amy?
Yeah, a couple, and I agree with what Jason said. I mean, it's first of all, NFL is by far one of the most exciting periods of the year for our organization. We start planning as soon as the last Super Bowl is over. I think there's a couple of things that are interesting this year. One is if you look at our first-time bettors, more than 50% of those are already moving to parlay and the player props, which are really those are the things that are kind of changing the narrative of the live sporting event, right? And you're much more vested when if you bet on Josh Allen or you're trying to bet on the correct score. So you're seeing the uptick of those products, the more engaging products, sooner. And then, we've been trying to make a push to just broaden the platform and, bring, for instance, more women onto the platform. So we just signed a great deal with the Gaming Society and Jamie Messler and the Gist. And so it's a bit of a, experimentation, but we're trying to make it a bit more inclusive and broader and bring more recreational users, but also more women onto the platform.
Last year at G2E, we were talking a lot about the pace of mergers and acquisitions and how this trend of consolidation was happening. What do you think? Do you think in 2 years, how many competitors are left standing, Jason? And are we going to see a pause in this mergers and acquisitions trend?
I think it's hard to say on the second part. I think certainly in the short term, yes, because when market conditions are the way they are now, it's hard to get deals done. If they're cash deals, maybe it's a little easier because things look cheaper, but then the companies typically don't want to sell at low value. So a lot of what would make sense for consolidation in this industry is what we did with Golden Nugget, which is to combine a stock-for-stock deal and ride the industry together because there's more strength doing it together and more ability to see success. But I just think those types of things are hard now because of the volatility in the market. Not to say deals couldn't get done, it's just a lot harder. As far as how many competitors there will be in a few years, another tough one. There's so many factors that play into that. What states do in terms of how many licenses they give out, whether you see new entrants versus more, focus on the existing entrants. Is there more deals, more M&A, more consolidation? those are all factors that will drive it. So tough to say, but I do think that you'll continue to see that the advantages of having scale the way Amy's company does and mine are more and more apparent as more states roll out and more revenues coming through the industry. And I think for that reason, it does make sense that down the road, I don't know when, there will be more consolidation.
I think if you look at, can you hear me?
There you go.
Yeah. I think if you look at other large digital commerce industries, right, look at online travel, food delivery, I don't know exactly what the numbers are going to look like, but it's not inconceivable to think that the top 2 or 3 will drive somewhere between 60, potentially 70% of the market. I mean, if you look at the most recent Eilers report, there are over 50 different operators. You're not going to have 50 operators in the end. It's just the scale at which you have to invest to acquire customers and build a phenomenal product. It just, whether you're public or private, investors will be rational over time.
You heard Jay Snowden talking about winners and losers. What you're suggesting is that, I mean, are we heading into a period where it culls some of the herd?
How quickly that happens and exactly, to your point, what that consolidation looks like, I don't know, but I've got to believe that there's going to be either some fallout or some consolidation. I think it's just a question of markets aren't really open right now, but if you're a subscale operator, it's just a question of how long you want to continue to invest the dollars to acquire customers.
I was talking to Sue and Jay about this whole omni-channel strategy. In some ways, you have this as well. Like both of you have businesses that have branched out beyond fantasy and pure sports betting. I'm curious for you, Jason, as you're incorporating the Golden Nugget online business, are you thinking about rebranding that as DraftKings, or do you like operating that as a separate brand?
I think as a separate brand, the whole strategy behind it, beyond just the financial synergies, was that we did some research and found that DraftKings as a brand was very powerful with the sports audience and not so powerful with the casino first, which maybe weren't sports fans type of audience. They didn't think of us as a casino or as an online gaming brand. They thought of us more as a sports brand, and so much of our iGaming revenue for DraftKings was coming through cross-sell. And we thought from the research we did that segment of the market was roughly half of the market, so it was a pretty meaningful segment, and demographically it was quite different, skewed more female, a little bit higher average age, so definitely less oriented towards sports. And so the strategy, and we'll see, you never know where things go down the road, but at least the view that we had going in and what I think so far in our early data is playing out is that we can more effectively reach that audience with the Golden Nugget brand, which is more associated with, casinos, and it's really an iconic brand from, the old Vegas days. So we found that that's definitely converted better from some of the early testing we're doing on that audience, and I think that'll be the strategy going forward unless it, for whatever reason, stops working.
Your competitors, you've got Bill Hornbuckle at MGM and Tom Reeg at Caesars, and Jay Snowden at Penn, who talk about the power of their player reward system as maybe not a replacement for customer acquisition costs, but that it helps keep customers in the ecosystem. I'm curious how that plays into your strategy and whether you might consider, I mean, you've already put your name on retail sports books. Would you consider physical casinos, bricks and mortar?
I mean, listen, it's something certainly we've thought about, but I think the reality is at the end of the day, you're trying to figure out how do I efficiently drive customers to my platform, and you're trading a potential investment in brick and mortar casinos against other capital investments. And listen, for the time being, we feel like we've been able to very effectively. There's two things, right? One is we're bringing millions of sports users onto the platform, and so we're in the 5 states at least where iGaming is legal. We've been very successful in moving them over to iGaming, but we've also demonstrated that through the FanDuel casino brand, we're able to bring customers in. And that, you're right, we have a retail footprint. We have 26 different retail locations throughout the United States through our market access partners, and that's been another important mechanism. But I think at the end of the day, it's about how do you drive loyalty and retention to your platform. That's one way to do it, but there's other ways to do it as well.
I mean, you have investments, you have NFTs. Could casinos be in your future?
I mean, I would echo what Amy just said, which is there are different ways that you can think about driving acquisition, driving loyalty and retention. It can be done through, full ownership of products, through partnerships, through, things where you have locations that are sportsbook or retail sportsbook based, but maybe not like a full-blown casino. It could also be done through the omnichannel strategy that you just referenced. So there's different ways. I think that when we look at it, we don't feel like that's something that has to be in our future, but we're not closed off to it, just like Amy said either. But it's in a pool of all kinds of different areas that we'd look at. And the other thing I think for us, I'd say, is that's not our expertise. So I wouldn't think that we would be out there trying to start some sort of, brick and mortar business organically. It would have to be through some sort of, deal, because we don't know how to run a property, the size of a big brick and mortar casino. It's actually quite interesting if you compare, what's going on in Europe, where, as Amy well knows, they're trying to move away from brick and mortar revenues. But that's just a totally different model, because it's the shops, and that's probably very different than the casinos. So this is a very unique market in that sense that I don't think exists in most of Europe. So it'll be interesting to see how it plays out.
Some of your competitors are very focused on expanding internationally. You had MGM making the acquisition of Leo Vegas. What are your intentions in the international markets?
It's something we look at. I think we also feel like right now there's such a clear, massively developing opportunity in the U.S. that to do anything to take our focus away from that would be, a mistake. At the same time, in order to accomplish our long-term goals, I think we have to be global. So we're trying to figure it out, but there's no determination that we've made yet on what we're doing, or even if we're doing it, and I wouldn't expect that we would make a big international push anytime soon, but somewhere down the road, perhaps.
What long-term goal?
Oh, just what we want to achieve as a company. I think to be a large digital company, you have to be geographically diversified outside the U.S. Can't think of many that aren't, that are, very large tech companies. So obviously Amy's company already does that, and there's a lot of, we were talking about scale in the U.S., there's a lot of scale advantage to being a global player as well. So it's something I do think is important for us long term, and it's just a question of, from a bandwidth, resources, focus standpoint, when the right time is, when there's so much happening in the U.S., and that's obviously demanding a lot of capital and a lot of attention and a lot of resources as well.
Amy, give me a sense of how you're thinking about cybersecurity. We've seen ransomware attacks skyrocket. I know that cyber insurance costs have incredibly increased for businesses. How do you go about ensuring that your company and your customers are safe?
Yeah, it's a great question. I mean, listen, if you think about the information, the private consumer information, financial information that our customers are giving to us every single day, as an industry, we have an obligation to make sure that we can protect that. And when you look at the purchase drivers, right, consumers want to know that they can trust your platform. And so if you don't take this seriously, we're not going to have a particularly successful long-term business. For us, this is one of those things where you're fighting a battle on many, many fronts. I came from Ticketmaster, and, we were subject to bot attacks all the time. We used to say, we have Black Friday several days a week, not just one day a year. So there's a number of things that we're doing. One is we have a 24/7 security operations center that is constantly, looking for suspicious traffic on the internet, any phishing attacks on our own systems. But we're also, this is one of the things, there are best-in-class partners. Many of them may be in the room right here, but, Perimeter X has been fantastic just in terms of managing bot attacks on the system. We partner up with a lot of the cloud-based solutions with Google and AWS. But we also have the benefit, because we're part of a global entity in Flutter, they can spot some of these global security threats, well in advance of them potentially even coming to the U.S. And so there's a lot of collaboration across our global organization as it relates to this. So it's a critical part of, of how we have to manage the business.
Jay Snowden said that the illegal operators are an existential threat to the industry. Jason, how are you seeing that particular challenge, and what the industry can and should do about it?
Well, I think the first and most important thing is actually, no matter how many times we beat this drum, it still seems like it hasn't sunk in everywhere, making sure everyone's aware of it. It is a massive thing that tens of millions of Americans are betting still in illegal markets, whether that's offshore or through local bookies, and that there's no consumer protection, no taxes being generated, no restrictions on anything. And so not only does that, create a threat in terms of just having, something that's not safe for consumers, from a competitive standpoint, it also puts us at a disadvantage because we do have to pay taxes. We do have to implement, identity checks and things like that most of the time work, but sometimes also result in false positives in consumers that, are actually okay getting flagged incorrectly. And it's just more friction. It creates more friction for them to get on the system. So you have to count, and also they have to pay, if somebody wins with us, they have to pay taxes. Maybe they don't pay taxes, maybe they do if they're playing offshore. So there's a lot of hurdles there, and I think it's important, first, like I said, for awareness, so that that just people understand the need to do it in the right way, and that lawmakers and regulators understand that they have to be sensible about the restrictions they put in place, the taxes they charge, because if it happens in a way that creates too big of a gap, we can't make that up. We're not going to be able to take people away from the illegal market. And if that's the case, then what's the whole point of this to begin with?
I think Bill shared some of the numbers earlier, but AGA just estimated $300 billion is going to the illegal market, right? Between online platforms like Bovada, illegal machines, skill game platforms, and if you flow that down to revenue and tax dollars, right? So say roughly $15 billion of revenue. That was almost a third, not quite a third of last year's overall commercial revenue. There's no other industry, can you imagine smartphone industry where a third of the revenue is going to illegal operators? And I think the bigger risk right now is sports betting becomes more mainstream. Candidly, it's confusing to consumers, right? Because they're targeting the big states like California, Florida, and Texas that aren't yet legal. And so if you're a consumer, you look at the Google search trends, 70% of the searches in the state of California are for illegal operators. In New Jersey, it's 1%.
Yeah, that's the thing, is it's actually, this is, because there hasn't been a lot of counterbalance there, it's gotten worse with new states. And so you have both what Amy's saying, which are places where people can't access our products. They're actually more demands being created by advertising and things like that. And so where are they going? They're going to the illegal market. And then the second thing is the consumer can't differentiate. They don't know who's regulated, who's paying taxes. They go to search on Google and they come up with somebody like Bovada, or they don't know.
And even if you're looking for it, you can't necessarily easily find whether it's a regulated operator or not. So the interesting thing is the AGA has...
All you know, by the way, is this one's making me answer a bunch of questions like last 4 on my social, and this one's not. And yeah.
This one does it.
So that's a real issue, and I think the AGA has done a good job creating more awareness around it, but it's still, I'm surprised at how many people, for whatever reason, that hasn't clicked.
Let me ask you, because you bring up where, in states where it's not legal to bet on sports, how there's still a big demand for it. In California, the polls seem to indicate that the Proposition 27 that would allow commercial operators in to offer mobile sports betting, it looks like it's going to fail. On that front, one, do you just fold and surrender and say, oh, well, California is never going to have it, or do you live to fight another day? Two, that strategy about really focusing on what the tax revenue would do to combat mental health challenges and homelessness, do you think that that was a mistake? Would it have just been better to go to the California voters and say, everybody else is sports betting, don't you want a sports bet too?
Well, I'm happy to start.
She lives in LA.
I live in LA, so I see all those ads many times a day. We absolutely live to fight another day. It is hard to imagine that the TAM ultimately won't include the state of California. And, Jason knows this better than I do because some of this predated me, but it has always been the industry's intention that we try to find a solution that aligns the stakeholders, right, between the tribes, the racetracks, the governments, and ultimately consumers, market access partners. And we believe there is a path to get there, right? Whether we get there in 22 or hopefully we get there in 24, we believe it is the right path, because if you look at some of the data that AGA just published, 9 out of 10 sports bettors, they want to be betting on a safe, legal, and regulated platform. And if Prop 27 doesn't pass this time around, that just fuels the exact illegal market that we're talking about. So, my point of view, we live to fight another day, and we keep at it.
I agree with Amy, and I'll add, it's hard to imagine, as you noted, California not having, California is usually on the leading edge, not the last state to get, to embrace new innovations. That said, if, an opposition side is willing to spend over $100 million, that's just tough to beat. It doesn't matter what your issue is.
Right.
It's tough to beat. And, going and trying to outspend actually probably makes it worse, because then people just get sick of seeing all the ads all the time. So I'm not sure that Edwy, to answer your question, oriented it around sports betting or any different message, that it would have mattered. I think when you have over $100 million being spent on false and misleading ads, and people don't know, just like they don't know the difference between illegal and legal market, they don't know, they just know what they see. And I think that's a lot of money to be spent pushing that, and it puts doubt in people's minds, and it kind of, makes it hard on the first go around to get your narrative out there. But I think the more people in California get exposed to the message, and the more they're able to take the time, this was all very fast, right? This all started in July, and the election's coming up next month. I think the more time people in California get exposed to the messages, and the more they're able to sift through what's true and what's not, I think you'll see more momentum towards, hopefully in 24 and hopefully even in 22, but probably more likely in 24 that's getting passed.
So it strikes me that I'm sitting here with the leaders of the 2 biggest sports betting companies by market share in the country. Jason, you're a founder. DraftKings is your baby. Amy, you came to gaming from the outside world, and you've only been in this job for 1 year. Your first interview with me was at G2E last year as CEO. I'd love to hear your perspectives on your companies and how you're positioning for next year, but whether that difference in experience might color how you see where you are and where you're going. What do you think, Amy?
You want me to go first? Listen, I don't know if our approaches are different because I came in from a different industry, but what I would say is I came from an industry which is actually in many respects very similar. It's a flywheel business where scale matters, and you have a lot of competitors that are trying to disrupt you, right? Which is exactly what, Jason and I face every single day. In terms of what we're focused on next year, and a couple things. One is path to profitability for 23 is a critical objective, and it's not just because we set a target out there, but we do believe it's important to make sure that we're building a profitable and sustainable business. But at the same time, we're still in the very early innings, and so we want to make sure that we're continuing to innovate and grow and capture, consumers as they come online. But for me, I think one of the most important things as a leadership team and as a company is that we do this, and in this industry, is we do this responsibly, so that as we're building this business, we're doing it the right way. It's not about how we do in the next quarter or two, but ultimately we want to build a business that's sustainable for the long term.
Yeah, I agree with everything Amy said. First of all, Amy's done a fantastic job. To come in and, it's one thing to take a new job, but when you're in the midst of an industry being built and everything is, happening all at the same time, and to be able to absorb it as quickly as she did and do the fantastic job she's done is really remarkable. And we speak all the time, and you could tell she gets it. I don't think I could have done that. I've been around doing this for over a decade, and I still feel like I don't totally understand it. So just amazing job by Amy. And I also would say what helps, and this has been true not just with Amy but our whole team, is that we're all very philosophically aligned. We've been very focused on the same objectives. When we talk about it, it's a debate about what's the best way to get there, not what should we be trying to do, where should we be trying to get to. So that just makes it easy to work together, and I think it makes the end product that much more effective. And we've been doing this together for quite some time, and Amy's kind of stepped in, and the relationship's only gotten stronger. So I feel lucky because I was nervous when FanDuel was bringing in a new CEO. Was I going to get somebody that was going to want to take things and a totally different direction, but I found from our first conversation that we think the same way and we're cut from the same mold. So I've been really happy working with Amy for the past year.
It's a very different dynamic coming in from the outside where you're competing, but you know, we have to have this great, you're friends too, exactly.
It is weird, right?
It's that dynamic actually is very different than where I came from, and it's actually quite refreshing.
It's nice. Not everybody's trying to always, you know, one-up each other. You actually have to collaborate on things, which I think in the end, especially when you're building the industry, is really important because, you know, a lot of where you've ended up with weird gaming laws that don't make a lot of sense, and you step back and you're like, why did they do that? It's because the stakeholders couldn't get on the same page and, you know, ended up advocating for different things, which just confused the policymakers, and then they did something that didn't make sense.
Well, I think the timing is right to leave it on a kumbaya moment. We can all sing together if we'd like, friends. Jason Robins, Amy Howe, thank you so much for your attention. Thank you, everybody. Thank you.
Now you're a hugger.
Oh, yeah, I am a hugger.
You're a hugger.
I'm a hugger too, yeah.
And now we all hug together and have our kumbaya moment. Let's go this way.
I'll smile, I know what it takes to fool this town. I'll do it till the sun goes down and all through the night time. Oh yeah, I'll tell you what you wanna hear.